Howdy out there, folks. This is Darius Dale here to present our macro minute for Wednesday, April 6th, 2022. Starting with markets, we have stocks down this morning, commodities mixed, mostly down with crude oil bucking the trend to the upside. Crypto down big, dollar up, global bond yields up. Big news this morning. We are following through with Fed Vice Chair Larry Brainerd's comments yesterday, effectively confirming that the Fed has a singular mandate right now, and that is tackling inflation. She also added that the Fed may also start to trim its balance sheet, quote unquote, rapidly as soon as next month. So we get the Fed minutes out later today. We'll get some incremental clues, hopefully, as it relates to quantitative tightening. We're taking it to the chart here this morning. You have money markets pricing in an additional 225 basis points of rate hikes this year. That's on top of what we already saw with respect to last month's 25 basis point hike. Fed hasn't done this much tightening since 1994, which obviously was a notoriously bad year for the bond market. And obviously, 1994 was the most tightening we've seen really since going back to when Paul Volcker did the Paul Volcker exercise. Obviously, the comments yesterday are having some follow through with respect to the bond market this morning. You have 10-year nominal treasury yield, 10-year tips yield, and 30-year nominal treasury yields up 8 basis points apiece. You also have a little bit of curve steepening this morning, with twos only up 5 basis points. Shifting gears to the macro front, the second batch of global services PMI data for the month of March were incrementally confirming of several themes recently discussed on this program. Number one, the post-Omicron bounce being realized in the data. Number two, the transition from demand-led supply chain disruption inflation to supply-led commodity price shock inflation. And then lastly, three, traversing a cyclical low in the Chinese economic activity. So accelerating, we have Brazil, U.S. market, ISM headline, ISM new orders, ISM employment, ISM prices. In India, nothing unchanged. And then decelerating, you get the ISM percentage of respondents reported slower supplier delivery times. So that's positive at the margin as it relates to the COVID supply chain disruptions. But obviously, sort of the commodity price disruptions are having an incremental sort of inflationary push here. And then lastly, with respect to China, you had the Caixin index tick down, or not tick down, crash to 42. That's the lowest print we've seen since February 20. It's kind of ironic considering that 2 years ago China led us out of the lockdowns, and they're still kind of the last major economy dealing with COVID-19 from a policy perspective. With respect to today's probable range setups, neutral VAMs S&P 500 minus 2.3% of downside versus 3.4% of upside in its probable range. WTI is also neutral VAMs minus 10% of downside versus 16% of upside in its probable range. Bloomberg Dollar Index that is bullish VAMs minus 1% of downside versus 0.9% of upside in its range. 10-year treasury yield, it's also bullish VAMs minus 40 basis points of downside versus 7 basis points of upside. Bitcoin neutral VAMs minus 6% of downside versus 9% of upside. Ethereum, neutral VAMs as well, minus 9% of downside versus 9% of upside. And then lastly, gold, neutral VAMs, minus 2% of downside versus 3% of upside. So with that, Darius Dale presenting our macro minute for Wednesday, April 6th, 2022. Best of luck out there today.